Good afternoon, guys, and welcome to the podcast. I'm really delighted about today's guest, Justin Boyd. He's coming out of Southwest Florida. He's the owner of Boyd Executive Consulting, and he is going to talk to us all about fractional CFO, mastering cash flow, profit first, and also blueprinting your financial future and designing winning price strategies. So, if those of you in the audience, a doctor, lawyer, high income, are interested in this, be sure to tune in. Justin, welcome.
Thank you. Yeah, I appreciate you having me on.
Yeah. And I know your schedule is tight. So talk about briefly your background and what you do and which clients you serve and what problems you help solve.
Yeah, for sure. We actually just rebranded too. And I know this is late breaking news. So we've rebranded into Cashflow Copilot. You can still find us if you go to boydexecutiveconsulting.com. It'll still forward, but that just don't want to confuse everybody. But yeah, we are a fractional CFO firm. We serve clients anywhere from about $500,000 of revenue up until about about 10 million of revenue. Most of our clients are in the services businesses. So we have a lot of tools and processes built around service pricing, how to price your hourly services, things like that. But we also have clients in the manufacturing space, construction. We even had a client that he does high-end chandelier rentals for large events and things like that. So a diverse client set. We help them with really making sense out of the financial stress. We turn it into strategic clarity, we like to say. We like to take what's happened in the past, combine it with what's happening now in their business, and then really focus on the forward-looking view of the business in terms of forecasting to give them a complete picture, to make sense of the story that they're trying to tell them, and to really help them make decisions. And the other thing we do is we try to highlight issues that we're seeing, inconsistencies, things that they need to pay attention to or where they could be better at, and really highlight those. And not only highlight those, but then walk alongside them to help make the decisions to improve those things. So that's the whole idea behind the new brand name Cashflow Copilot. Is we really see the business owner as the pilot of the business. We see ourselves as the co-pilot with them on every trip, helping them navigate all the issues that are coming about, help them reach their destination safely and soundly. And whatever we can do along that path is what we try to do.
Yeah. Interesting. In the past, we've had CFO and CPAs, accountants, and talking about fractional CFO and this profit first method. But you come into this episode with a unique angle, which is talking about winning price strategies. And what are majority of business owners or the doctor, the dentist, they're struggling, they're working 70, 80 hours and their business is generating like $1 million in revenue, but they're still not making profits. What is wrong with their price strategy?
Yeah, it's hard to say, obviously broad strokes, but typically one of the best things to understand is how you relate to the other companies that you're competing against, and also really understand your internal numbers as far as gross profit margin, break even points, and then the net income that you're trying to hit. And so what a lot of times we'll do is we'll compare a specific company to other companies in that same industry to understand, hey, where are you spending all your money? What are your ratios looking like compared to those similar companies in the industry? You can also get a little bit of an idea of what other people are charging based on public information and things like that. But at the end of the day, there's dozens of different pricing strategies out there. There's dozens of different things that could be wrong. And we just ultimately try to dig in to dissect what that is. A lot of it boils down to, number one, I have to know what the market is charging. I have to understand what that price point is. So that's one piece of information. And that can get really detailed for any business in terms of individual services or products offered, product lines, service lines, bundling things together. This item is not super profitable, or this service, but it brings in this other service with it. So that together is more profitable. But knowing what the market can bear is the first really data point. The second data point is really understanding, what does it take for me to be profitable? So based on the internal logistics and mechanisms of my company, knowing the fixed expenses, the variable expenses, and the direct expenses of performing the service versus the indirect, am I optimized as best as I can be? And if so, what price do I have to charge to be profitable? And again, you break it down by, I got all these different products or service lines. They might all be different, and that's okay. There might be things that are unprofitable. And once we have the data, that's really the struggle for a lot of people, is getting the data to support the decision, right? So a lot of people don't have the data. So the first thing is you need the data internally to understand where your profit is amongst all your products and services. With that, you might decide to kill some products that are not high profit, or you can raise the price, or you can say, hey, it's mandatory because it brings in these other high profit areas, but really understanding your internal margins for all those different things, and then how each of those contributes to the collective whole of the company. So it's really about having the data and then diving in layer after layer to get down to the root cause of, okay, I understand where everything's happening, how everything's contributing to the company, what's necessary, what's not. And now I can make the decision, do I raise price because I'm losing money? Do I lower my price because I'm above market price? Different decisions within there, but it's really about having that data. So that's the second piece. And then the third piece is where are we headed in the future? Or are there other things maybe outside of the business or that complement the business that come into play? But you really have to have all those in a line. And then once you understand your pricing strategy, the next piece is sales and marketing, which is a whole other conversation. But how do we present the pricing to the customer so that it's clear? It explains why our pricing is what it is. Because I think a lot of times people, if they lose trust in you, even if your pricing is okay, if they don't know where that price came from, or they feel like it's predatory, or they feel like, I just don't know how they came up with that, that can lose trust and they could move on to the next company that might even charge more. But really, how do I present this clearly, factual, straightforward? Here's why it is what it is. Here's how we're better than our competitors. And then also giving them options, right, is a big thing. If you give them one option, you say, here's what it is, you're really giving them an ultimatum, and they either have to say yes or no, or their other option is to go to another competitor. So it's really a big deal to give them multiple options within your firm to say, hey, and I understand your, needs. Here's 3 potential options. Here's the one I think that's the best, but I'm going to give you a couple alternatives if you want to choose something else. That is a big deal as well, because now you've gained more trust. You've given them multiple options that all route back to you. But that's a big strategy that works.
Yeah. I really love that. I really love that answer. So a lot of services companies like a private practice or a dentist,
Mhm.
what margins should business owners be expecting from a healthy company?
Yeah. So again, it depends on the industry. Home services, which is what we have a lot of clients in, typically you're looking for gross margins at the lowest point around 50%. We do have clients upwards of 70%, the low 70s. If you have someone that's truly not participating in the business themselves, if they are, that's when you get the higher margins. But if they're not, yeah, I would say on average around that 60% mark is really what we're trying to hit from a gross perspective. And then a net, we're trying to get at least 15 to 20%, but that's not typically where they're starting. Yeah. As far as the doctors, the dentists, lawyers, CPAs, they can all differ a little bit depending on the size of their firm and the structure and how all that is set up. But that's one of those things. We use that tool where we'll go on and we'll say, hey, depending on your specific industry, this is what we're seeing from other firms. They may or may not be successful firms, but we understand what those margins are, specifically from a home services standpoint, which encompasses a lot of different services. Typically, we're shooting for at least 60% gross margin there.
Fascinating. Next question I have for you is, we talked about what numbers should business owners be looking at every month if they want to know and grow their businesses?
Yeah, for sure. So the first one is gross profit margin, like I mentioned. Everyone's typically concerned with revenue, and they're typically looking at their net income. However, between that, we really have to understand what is our gross margin, which really tells us, after we subtract the cost of actually delivering that product or service, what are we netting? And the reason that's important is that's really what drives the horsepower of the business. Everything beneath that, in terms of overhead costs, your administrative labor, your marketing, your fixed expenses like your insurance and rent and things like that, those, a lot of times, they're not as changeable, or you don't have as much control over a lot of those things, or they're more fixed as it relates to the volume of the business. And so you can still change those things. You can still have some power over that. But what we really want to do is we want to say, hey, for every dollar of revenue that we sell, we want the highest possible gross margin, because that flows directly to the bottom line once all of our fixed costs are covered. So that's really the horsepower of the business. We need to optimize that, because that you don't have to do anything else, but what you're already doing is selling revenue, and that's going to bring a lot more profit and cash flow to the bottom line. And then we'll separately work on those other expenses to try to minimize those and things like that. But again, a lot of those things you can't change as often, or they're just a necessary evil of the business. And for every dollar that you cut of an expense, you're going to save $1. But for every percent you save from a gross profit standpoint, every dollar revenue you sell, that's going to scale exponentially, right? So that's a big deal. So that's one thing. Second thing is your net income, because that's really, again, what's going to drive cash flow. It's what's going to drive growth or reinvestment opportunity. So I would say that's really the second thing. Third thing is understanding your marketing dollars and your return on investment for those. Which channels are successful, which ones are not, which ones lead to the lowest cost per acquisition of a customer and the highest lifetime value, I would say is the third thing. Fourth thing, I'm not doing this by order of importance. I would say one of the most important things, it's in our name, is cash flow. What is our operating cash flow every month? And we also are going to understand debt and distributions and things like that. So we'll get to net cash flow. But overall, we need to understand what is the cash flow every single month, because that is truly the lifeblood of the business. Without cash, we're not going to be able to buy products to sell. We're not going to be able to pay employees if it's a services business. We're not going to be able to pay any of our bills, pay any of our debt obligations, anything like that if we don't have cash in the bank, regardless of how profitable you are. Your net income could look great, but if your cash flow is low or negative and it's not servicing, the company's not going to be around for that long. So we really want to understand cash flow. And that's where we really focus on. Is most people are familiar with their P&L, most business owners. They know a little bit about the balance sheet, but they don't spend a lot of time on the cash flow statement. So we really spend a lot of time mapping out every single dollar in and out of the company. So we know here's exactly what went into or out of your bank account, regardless of your P&L, regardless of your balance sheet. So we look at everything together. And then I would say the last thing would really be, from a short-term standpoint, just understanding your current ratio, understanding how much cash and AR do I have for short-term assets compared to short-term debt, things that I'm going to have to pay off, like credit cards, other short-term loans, short-term obligations due within the first 12 months. So I would say that is it's a measurement for short-term survival, which is super important. And then I would say the last one is, from a long-term perspective, understanding our debt to assets. So how leveraged is the company? That really indicates what our long-term survival is. And if we have revenue downturns, we have cyclical revenue, things like that. If we have a high debt ratio, that really presses the company into rough spots in terms of cash flow when revenue dips, because we have all these debt obligations. They get first say over the assets of the company before the owners do, right? So we really want to understand that from a long-term survival perspective.
Yeah, I really love that. That was a master class in just the next question I have for you is, because you talked about downturns, could be recession or just like a temporary, even like for some owners, like the last 2-3 months are very slow, or the beginning of the year. So how should business owners, based on your expertise, be positioning themselves? Should they just be stockpiling as much cash and then, or just living, and then that way they can weather it? How do they plan for all these seasonal downturns and upturns?
Yeah. And ideally, if it's a company or if it's an industry that has annual downturns or has gone through a recession before, you know the effects of those things. Ultimately, the best thing you can do is the daily, the weekly, the monthly habits of, I'm going to get my cash flow set up so I know how much is going into my operating account to pay my bills. I'm going to be setting aside money for taxes every month. Figure out a percent, depending on your tax situation. It could be anywhere from 5 to 20% of what's going to go in, but typically I recommend doing at least 10% for taxes. Putting money into a savings account, which when it grows to a certain point, do some conservative investing with that to get some sort of semblance of a return. And then also profit for you as well. Just having those different, and it goes along with kind of the profit first mentality. I don't typically subscribe to having that many different buckets, but at least, hey, my taxes are paid. We have a savings account for the business. Also could be used for capital purchases down the road. If you're like, hey, we need to buy a big piece of equipment or a building or things like that, we need to be saving every single month for that and planning ahead. So just breaking things out into those buckets. And if the operating bucket is continually low, figuring out, okay, why is it continually low? And how do we need to adjust the expenses of the company to make up for that? And then really just forecasting is the other thing that we really stress, as far as we need to map out where we think we're going to be based on some analytics, based on our past history and trends. But then we also want to stress test that with some alternate scenarios. What if this happened? What if that happened? And really mapping that out to show, okay, our cash is going to decrease by this much if we run into this situation. How is that going to affect the cash inflow to all those different buckets, and then plan accordingly? So as far as fixing it, again, it depends on how severe it is and what the situation is. But those habits of continually putting money into different buckets, just like you would in your personal life, in order to have funds set aside for these different events, is massive. And the other thing is just every 3 to 6 months going through all of your expenses. I sometimes call it thieves in the storehouse exercise, where it's, hey, what are all these little things that I might not be aware that I'm spending? Doing a deep dive on those by yourself or with a financial professional, but going through all of your expenses and figuring out, is this really crucial? Do we really need this? Is there a way to save on this? And a lot of times we'll find that companies will have all kinds of different software that they either aren't using or they're not optimizing. They wanted to get on it, they wanted to do something with it, but really never got around to it. Things like that. And then every 6 months to 12 months, can we renegotiate rent? Can we renegotiate insurances, workers' comp, different things like that? Again, those aren't as changeable as often, but that can be helpful to scrub through those and continually push on that. And then again, just having some price flexibility in terms of, okay, if this happens, what do we need to do to pivot to either price differently, or how do we add value to what we're doing that doesn't cost us a lot of money? So what are some things we can add to differentiate ourselves? And it can be very small and cost little to nothing, but it really helps differentiate you, so that assuming that you're a necessary good or service when when recessions hit, they're going to look to you first, and because you're going to be differentiated from your competition.
I love that. And so I know a lot of the doctors in the high income professionals, this is really a value packed episode. So talk about what your firm does, how it helps clients. What
Yep.
are are a lot of people struggling with revenue or expenses or margins or budgeting? What do people come to you for, and how can you help them?
Yeah, I would say definitely margins and cash flow are a couple of the biggest things. Another big thing is when firms are growing significantly and they don't know how to do things in the right order and do it responsibly. So a lot of times they're trying to manage all these new things and hire all these new employees and purchase all this new stuff. And we need a new building, and we need new equipment. And then we're getting these new customers and we're growing, and I don't know how to keep it all straight. And my systems are breaking because they're not built for where I'm at. So on the downside, and those people can be struggling with cash flow as well. Or you can have the businesses that are just struggling with cash flow because they're not bringing revenue in the door. But I would say, yeah, massive growth is one thing, or expansion, cash flow issues, margin issues. And so what we typically do is we bring them in the door, and surprisingly, a lot of these companies don't have a budget. They've never had a budget. We've worked with even $10 million companies that don't have budgets. They'll come in the door, and we'll really focus on, first of all, understanding their business from top to bottom. Like look in every nook and cranny, just understand exactly the black and white picture of the business in terms of the tactical, how it's set up, and all this stuff. But then also, what are the goals of the business? Where's the owner trying to take this? And understand their market, how they're competitive, different things like that. Just really get a good picture. The next thing we do is really help establish a detailed budget, because if we don't have something to measure against, we only have a feeling of how we're doing, how we're performing. And so we really force the issue of diving deep down. And if it's not a profitable looking budget, we'll press back and say, hey, this is not going to get us to where we need to go. We need to reconfigure some things, and we'll work through some of the decisions right up front at that point. Once we have that established, we figure out what indicators, what KPIs do we need to track for this type of business. We have a lot of standard ones that we do, but we have custom ones that we make depending on the industry, depending on the company or the issues that we're dealing with. So we set up a really clean, nice dashboard that we can review that highlights the most important numbers, a scorecard essentially for them every time we meet. So we really want to get that hammered out. And then we really dive into the forecast situation. So we'll be looking at their numbers and we'll project them out, and we'll say, okay, hey, based on where we're headed, here's where we see we're going compared to the budget. 12 months from now, here's where we're going to be cash wise, ratio wise. Here are some things that are concerning. Here are some things that look good. What big decisions do we have coming up? What things are going to change in the future? Let's bake that in, and let's look at some of those alternate scenarios. But we really try to stress test it to give them a picture of Here's again what your numbers are trying to tell you. Here's what your business health is, good, bad, and the ugly, so that you can make decisions based on that. And then depending on which of those areas is not performing up to expectations, we will then dive into that and say, okay, why are we not bringing in revenue, or why is our gross profit not as high? We need to dig in a layer deeper to figure that out. And once we figure that out, okay, what are the root causes? How can we fix those things? But it's really about understanding again, okay, here's the past, here's what's already happened. But in order to make good decisions while we still have a runway, we really have to forecast the future as well. So we'll really try to focus on that, because a lot of companies, they'll track their numbers. Hey, I'm doing well here, I'm not doing well here, but they have no headlights, as they're driving on a dark road and they don't have any headlights. So that's a big thing. And then just doing those deep dives, just spending that time to say, what do we have to talk about this month? What's the most pressing thing? Let's do a deep dive on that. Let's churn out some data. Let's use some tools that we have developed, and let's solve some problems. And then let's move on to the next thing as well. A lot of times business owners just want to talk through and have a sounding board as well on some of the decisions that they have to make. We help out there as well.
I really enjoyed this conversation, and just you provided so much value for the audience. How can people connect with you and reach out to you and work with you if they spark their curiosity and interest?
Yeah, for sure. Yep. So we are at yourcashflowcopilot.com. You can find me on LinkedIn as well, Justin Boyd. Or if you want to just set up a meeting, it's calendly.com/cashflowcopilot is a way if you just want to set up a meeting. And I always tell people, I'm happy to chat with anybody and just, hey, you got a question or you got an issue, let's chat about it. I'm not going to be like, nope, only for clients. I'm very flexible that way. I would say I came from the corporate world. I like to run this company in a more relaxed fashion. We take it serious and we do all the things we need to do, but it's more informal. And we're like, hey, we just want to work with the people. We do this because we love working with business owners. We like that relationship. That's really where they get the most value. That's where we get the most enjoyment. So needless to say, I'm always happy to chat through anything, help out where I can, even for people that aren't clients.
Yeah. Awesome. Thanks so much, and keep up the great work, and wish you continued success in your endeavors.
Thank you. Yeah, I appreciate it. Thanks for having me on. I'm a big fan of the show. It's great to listen to.